All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're going to be doing is we're going to be comparing the Kraneshares China Internet and Cover Call Strategy KLIP versus TSLY. And we're not going to go into an absolute deep dive, but the thing that we're going to do here is I want to show you guys KLIP. I think KLIP might actually present a better opportunity than the Yieldmax TSLA option income strategy fund. We're going to go through that in this video. We're going to go through the future of China and kind of why I think this way. We're also going to be comparing KLIP to its underlying index or the underlying asset that it tracks, which is KWEB. I'll tell you a little bit about KWEB as well in this video, and we'll get you all up to speed. And we're also going to compare TSLY and TSLA just to kind of have a little comparison video, have a little bit of fun, but also show you the main reason being that KLIP is in a bullish run and I see a lot of potential in KLIP. Obviously, don't take this as financial advice. I'm just saying this for myself and just for the viewers who keep up with me, but I don't recommend necessarily investing in KLIP. I'm only showing you the information, what I see. So without further ado, I want to say we're up to 3,332, not 33, but one more subscriber and we're at all threes. We're a third of the way to 10,000 subscribers, so that's a little milestone. Thank you to everyone who watched our last video. 3 out of 10, 1.5k views. That's pretty amazing. But if you haven't done so already, please do subscribe. And yeah, let's get into this video. So KLIP, if you are unaware, I'm sure you guys are aware if you guys watch my channel, but for those who aren't aware, KLIP is the Kraneshares China Internet and Cover Call Strategy ETF. Just to go over it super quickly, they pay a 49% dividend. And over the past little while, they've been paying a 55% dividend, down 50, down to 49%. The reason being is because KLIP, the stock is appreciating. And when the stock price appreciates, the dividend goes down, which honestly is what we kind of want to see. Now, they do pay monthly. Well, actually, don't get too concerned. It's still a 50% dividend, so don't worry. But they do pay monthly. They do sell covered calls on KWEB, which is an ETF. It is the underlying asset that KLIP tracks. So they write cover calls on KWEB, and KWEB is the China Internet ETF. Basically, they track the Chinese internet sector, and they have about, I have their kind of prospectus up here. We could zoom in right here. You could see the number of holdings in KWEB is 32 holdings right here. They have roughly about $5.2 billion in assets, but KWEB itself tracks the Chinese internet sector, which is a $2 trillion industry. So as you can see here, China retail web sales total $2 trillion in 2022. And KWEB, obviously it's not an American stock, but it's a Chinese kind of ETF, but it has services such as Google, Facebook, Twitter, eBay, and Amazon that are companies similar, not those companies directly, but similar. And some of those companies, just to kind of go into it and dive in, we can scroll down here to their holdings. See their PDD holdings, Tencent holdings is a big one, Alibaba Group is a big one, and you have a bunch of other holdings here that you could see they're pretty well diversified across those holdings, not necessarily having a huge chunk in one, but instead spreading their wealth across them all. Now, that is a little bit about KWEB. They are the Chinese internet sector, and they are a pretty volatile sector. Just going to their stock price here, you can see over the past 6 months, they kind of trade between $25 and about $31. So KWEB takes advantage of this by writing cover calls on KWEB, and that's how they create this pretty massive 50% dividend right here. Now, just going over KWEB's previous history, what I want to show you here that's actually very interesting, and which is kind of comparing it to TSLY, is look at this. So KLIP trading at 17.17 right now. They are down 0.58% on the day. Now, what is KWEB down? KWEB is down 4.27%. So literally 4% more than KLIP. Now, when looking at TSLY, TSLY is actually down 3.78%, while the underlying stock is down about 4.2%. So as you can see, TSLY, the main objective with the Yieldmax fund is that TSLY is going to capture some of the upside with potential limits to their gains, but they capture all of the downside, all of this negative. The one nice thing about KLIP is I noticed over the past little while, it's not necessarily capturing all of the downside on KWEB. And that is a really big difference when investing in TSLY versus KLIP. Now, TSLY, I do hold TSLY. I don't unfortunately have my portfolio up or anything like that, but I hold about 100 shares of TSLY, and I've been kind of concerned that TSLY has been underperforming due to the fact that it's tracking Tesla so closely on the downside, but not necessarily on the upside. As you can see over the past kind of month, it's been flat, whereas Tesla has really risen to the upside. Now, KLIP, on the other hand, has actually done really well. Going to the 1 month or even the 6 month calendar, it shows pretty much straight down, which generally KLIP does go down just due to the fact that it's paying out really high dividends that, I could show you here in a second, actually. So you can see their dividend payout calendar. They're paying out dollar dividends, 80-cent dividends, all the way down to 74 cents, recent one being 70 cents. But that is kind of the reason for the depreciation. And at the same time, it's also because KWEB has been flat or even in a downtrend. Now, with KWEB slowly appreciating over the last month, going from roughly $25 all the way up to a high of $29, KLIP was actually able to capture this really nicely, going from about $16.30 all the way up to $17.30, which is just roughly about 10 cents higher than it's trading right now. So as you can see, KLIP has actually captured a decent amount of this upside in this movement, which is great if you are a KLIP investor. I hold about 100 shares as well of KLIP, and I am bullish long term. I think over the long term that the Chinese government and the Chinese economy is going to recover, and that's going to lead to a pretty substantial increase in KWEB and also an increase in KLIP. And when KLIP's underlying stock price, when this $17 goes up, so will their dividend distributions as well. As you can see, when they were paying out 80 cents, 83 cents, 83 cents, that was back when their share price was closer to the marks of about $18 to $19. If we could reach that again, I think they will be hitting these levels of dividends once again. And obviously, all the shares bought at these current price points are going to have a much higher yield on cost, higher than the 50% advertised, which I think is pretty interesting as well. Now, looking at kind of China's economy, so I've seen quite a few articles. You can go on Google for yourself if you're interested, but it says the Chinese economy is projected to grow at about 5.4% in 2023, reflecting a strong post-COVID rebound. Now, obviously in COVID, the Chinese economy was pretty much shut down. They were in lockdowns for a majority of the time, which really put a damper on their economy. And when going to KWEB, you could see this. Over the past 10 years or so, KWEB has stayed flat, appreciated during certain times, and really appreciated during COVID. But it went through a pretty big bearish cycle, as you could see on the downside of COVID, when the Chinese government continued to keep the lockdowns. Now, one thing with China opening their government back up and us now seeing positive growth in China, I'm expecting KWEB to see the exact same. It's been trading sideways for a little while, but with new growth numbers coming out, and even in 2024, on top of this 5.4% in 2023, 2024 is expected to grow about 4.6% amid, continuing weakness in the property market and subdued external demand. Now, as that demand rises, obviously, we should hopefully see a rise in KWEB's price, which will correlate to a rise in KLIP's price. And I'm happy with my KLIP investment. My average cost per share is actually about $19.50. We'll get into that in another video because I'll probably be buying some more KLIP in the very near future. But that's just a little video on KWEB. And to even bust it to the full screen right now, what I can do is I could show you how I basically judge where I think an investment's going to go based off the MACD, which is kind of like saying whether we're in a bullish or a bearish trend. If my screen will load, I could show you that, which it has right now. And as you can see, for the longest time, KLIP has actually been in a bearish trend, but is slowly transitioning to that upside, which is great to see. And if we can get on this upper half of the MACD, then we will see a pretty bullish run in KLIP. So with all that being said, I hope you guys did enjoy that video. You guys open your eyes to KLIP, and you can see the potential within KLIP stock, obviously over the future. And, just with the current kind of increase in KWEB and increase in share price with KLIP, hopefully will come more dividends. So if you guys did enjoy this video, please do remember to subscribe. We're just one subscriber away from 3,333 subscribers. If we can get beyond that, that would be amazing. I hope you guys did enjoy this video, learn something new, and I will see you guys in the next one.